This is the Scrap Metal and Commodities Recycling Report, brought to you by Benlee roll-off and open-top trailers, as well as Raleigh and Goldsboro Metal Recycling. Today is Monday, November 9th, 2015. My name is Greg Brown.
U.S. steel production was down yet again last week and has been declining for months. Production also remains well below last year. U.S. oil drilling rigs, which use large amounts of steel, had their count fall yet again last week. There is no sign that workers that make steel for these rigs will be coming back to work anytime soon. This chart of scrap steel prices of the last almost 2 years shows scrap steel is now selling for about a third of what it was less than 2 years ago. The U.S.'s largest foreign buyer of scrap steel is Turkey, which has been reducing their global scrap purchases. So combined with the U.S., where production and scrap use is declining, low scrap demand is bringing low prices. Last week we showed a version of this chart which has annual average scrap steel prices going back to 1934. But this chart adds where prices are today. Our thanks to Michael Slaversky of Credit Suisse for the chart. Again, this is the largest drop from an annual average price in the approximately 155 years of the U.S. steel industry. This chart shows a drop of $204 a gross ton from the average high price of 2014, which is a drop of $9.11 per hundred. If you looked at data from the peak of last year, which was about $405 a gross ton, that peak to today's $148 is a stunning drop of $257 per gross ton, which is $11.47 per hundred. To put this into perspective, a few years ago we were paying $12 per hundred for a 3,000-pound Camry. That was $360 for that car. Today we're paying $1.50 per hundred, which is $45. That means we're paying 8 times more for that exact same car just a few years ago. Lastly, as it relates to steel, looking at iron ore pricing and scrap steel pricing, as China's economy slows and they reduce steel production, iron ore demand, then iron ore pricing will decline. This will take scrap steel prices down yet even further. Copper declined last week and has been falling for about a month. While a couple of months ago copper prices stabilized after major mine shutdowns, China's current low demand is a key reason for copper's decline. Looking at this 5-year copper chart, it shows that last week copper closed at an almost new 6+ year low. Related, yesterday Sunday, China released very troubling overall trade data, which was well below expectations. In October, China's exports were down a large 6.9% from a year ago, and their imports were down a staggering 18.8%. Aluminum prices were up for the week, which was the first real uptick since the summer. The reason was pretty clear. Last week, the largest producer of aluminum, Alcoa, announced shutting down 3 enormous smelters in the U.S., which will restrict supply. But looking at this 5-year copper chart, aluminum chart I should say, it is clear that aluminum is trading near 6+ year lows. Steel prices continue to fall as discussed, which is great news for buyers of steel. But lower prices took a toll last week as U.S. Steel announced a major loss and announced they are scrapping moving to a new headquarters building to save costs. ArcelorMittal, the largest steel producer in the world, also announced a major loss, with falling prices being a key reason. We always like to end on a positive note, so last week U.S. car sales were released, and it is possible that 2015 will be a record sales year for the industry. The largest market in the world for car sales is China, and their sales were also up last month, a nice 3%. October job hiring was released last week. The data surpassed estimates with 271,000 new jobs created, and the unemployment rate hit a new multi-year low at 5%.
And with that, we hope all have a safe and profitable week. My name is Greg Brown.